This is the Chapman Business Report.
And welcome back to the Chapman Business Reports, our weekly look at business, financial markets, and a special focus on the regional economies of Southern California. I'm Pete Weitzner. I head up the broadcast journalism program here on the campus of Chapman University, actually a couple of blocks just to the west of us at Dodge College of Film and Media Arts. And every 6 months, I'd say, it's our semi-annual show focused exclusively on real estate here in Southern California for more than 30 years. Phil Immel has been one of the go-to real estate guys with Prudential California. Also, you know him from very often his advice on his website, The Real Estate Guru, from radio, from TV, from this show. And he joins us as we check in, as I mentioned, on our semi-annual checkup on the real estate market. Welcome, Guru. Welcome back.
Thank you, Pete. Always good to be back.
And we've been doing these for a couple of years, and I would say probably you come bearing the best news since we started bringing you on, right?
Yeah, I used to be a little conservative and pessimistic about the market.
It was easier to book you. You had more time.
Maybe that's true, too. The reality is this year is really stabilizing at all price points now, and we've had just a tremendous shortage of inventory. So this is really going to be the year of stabilization, according to our research.
And that would be going back, what, to the start of this year or the last few months?
Yeah, it's always, you know, the indices always lag a little bit, so
right.
You start seeing it, but it started showing up in spring and summer big time. And a lot of it's due to the lack of inventory and the foreclosures. The number of listings on the market for foreclosures started dropping dramatically over the last several months.
Well, I would think when you had all the foreclosures on the market, now I know banks move slowly, but that would have been inexpensive homes, and that maybe that would have helped the market, but in fact the opposite, right?
Well, actually, the highest activity was under 500,000
right.
in Orange County and regionally around LA as well. So then the 500 to a million has also been absorbed pretty quickly too. And now the million plus, even the luxury market. I have a question for you. Pop quiz in your business. How many listings are available today in Orange County over $1 million that are bank-owned detached homes? What would you guess?
$1 million homes are still 500.
Five, and there's about 4,500 listings, and only 5 of them are bank-owned over $1 million. The research is just unbelievable. We're down 80% on listings of bank-owned properties since 1 year ago.
Is there any reason to expect there'll be another wave of, I mean, I know notices of default are down as well, so
right.
Looking forward.
Yeah, no, I think we're past the peak of the market in terms of the distress and bank-owned situations. And, you know, the banks have held back on shadow inventory. We've talked about that before. But there really isn't that much, and they're just going to dribble it out, I believe.
Right.
So I think we're past the peak and the worst of the situation. That's why I'm kind of calling this as the stabilization year.
Sure, because, I mean, obviously that wouldn't be a big fear of a buyer, is that if there were still more foreclosures to come
right.
on the market, the last thing they want is in their first year and they're down 10% on their equity.
Exactly. They put your down payment down and it evaporates. That fear should be gone with buyers, and now with low interest rates and, you know, tax deductions, it's a no-brainer.
And just to point out, it was only a year ago, it's an astounding figure, half the homes sold in Orange County, September 2011, were foreclosure or distress sales, I guess.
Right.
Not just foreclosure, short sales.
Short sales too, right.
Only 10% now.
Yeah. I mean, the pendulum has swung very rapidly, and it's caught a lot of us in our own industry off guard on that. But
Now we're going to focus Southern California, but even nationally, the Case-Shiller Index, which measures all homes, pretty conservative. You're going to see smaller price increases here. But looking at all homes, up 1.2%. That's the best performance in a couple of years.
Right.
So you think, just generally speaking, people have the confidence that, just as we mentioned before, that their equity isn't going to erode, certainly not in the first couple of years. They know, I mean, this is not a place where you're just going to, you know, double your net worth in the next couple of years, so there might still be some markets where you could.
Yeah.
The Dakotas, for one, but they at least have more confidence that...
Well, I think it's a combination of confidence, you know, and if they still have jobs after this recession we've been in, and also just demographics, you know, for 5 or 6 years, there's a lot of pent-up buyer demand. And a lot of rents are going up, so those people should.
All-time high now in Orange County,
yeah,
isn't it?
And you get no tax deductions, so it's a no-brainer. Again, if you're that first-time buyer, to step up with a 3.5% down and buy a home, if you can find one anymore.
Right.
But two, you know, you still have marriages, divorces, family growth. Mom and dad go to a retirement home. You've got a lot of other reasons why the inventory will change and why the market's changing too.
Well, looking at the resale market in Orange County, the median in September was $450,000. 5 years ago, we hit the peak, 645,000, and perhaps one day we'll hit that again. Although at that point, at 645,000, affordability was about 10 to 12%, meaning only 1 in 10 could even afford to buy a home, and that wasn't very healthy. But we hit the nadir with 365,000, so we're up actually on that median by about 20%, and that's a gain in just the past year at 450 of 6%. So if you bought last year,
yeah, you're good.
You are good in most markets. Is it still then, though, the first-time buyer, not even the move-up buyer that's making the sale?
This year it's been predominantly the first-time buyer, but we're starting to see the trade-up market happen. And again, what goes with this is values increase, there's less homes underwater, and people, if they can get out of that smaller home and trade up, they probably will.
Right. So talking about, now you mentioned 3%, but that's sure, that's FHA, and that's, I guess, is still a big part of that first-time buyer market, or are many first-time buyers, other buyers, they have to come up with 10, maybe 20%?
No, I think predominantly it's first-time buyers are putting 3.5% down all day long. That's probably 80–90% of the loans in Orange County and LA. So that is the vast majority, and the rest are Fannie Freddie loans with 10% down.
If it's a conform, which now the Fannie Freddie limit in Orange County is finally reckoned to reality, and it's
the prices came down to meet that number now, and under 729 for the jumbo version of it, and I think it's 460 something for.
Having said that, even if it is 3% or if it's 10%, there is the matter of qualifying, and it's much more rigorous.
Much more rigorous. It really is. It's like getting a full exam and a general. Well, there's many different kinds of tests one can get medically. It's worse than I've ever seen. And with that is we're having appraisal issues now that we have never had before, because the appraisers have not caught up to the marketplace, and the comps are closing, and they're so skittish about a good number. And we just lost a $3.5 million deal because the appraiser came in $1 million off. How do you come in 1/3 off? We don't know. But we're experiencing that. Many brokers across the United States are as well.
Well, and how about so that's the appraisal part. How about just from the bank's standpoint? Do they want to make mortgage loans, or are they,
they've been very, very slow in the draw. A couple of the biggest name ones that all of us know out there. They say, well, we're auditing. I mean, there's relocating doctors who've been caught up in this situation where the banks keep going through audit and governmental intervention. So it's getting slightly better. There is jumbo financing reoccurring. We haven't seen that in 5 years.
So let's just look at some more numbers. I mean, we're still, because there's not enough homes, I guess, on the market, when you look at the total home sales, again, focused on Orange County, a little less than 2,700 in September. When things were rip-roaring, we were at 4,500, 5,000, right? So, I mean, still a ways to go.
Well, there was, last year there was 17,000 homes available at once in Orange County listed.
I'm talking about just homes that sold in a given month. So a really good month.
Yeah.
When the real estate market's white hot, is about 4,500.
Correct. Yes.
And the problem is, for one, I mean, yeah, the economy is decent. It's not very strong, but like you say, you have only 4,200 homes. Verify this number. This is from reportsonhousing.com. 4,200 homes on the market. Last year you had more than double that.
Oh, at least, yeah. In fact, it was more, the 4,200, it might have been 3-4 times that number.
Right.
So, and this isn't just Orange County, LA, regionally Southern Cal. It's across the United States. There's a huge shortage. New York's on fire with a shortage of inventory. Prices are starting to, we're going to see appreciation, and I haven't said that in 5 years.
Well, that's good to hear. How much is the Federal Reserve hoping? We know they're back in the game. They're buying mortgage-backed securities. How much can you say that they're helping keep rates down, right? Yeah,
they're helping keep the rates down. There's predictability that they won't raise rates. And, of course, people that already have existing mortgage loans are tied to the low index. I think the 10-year bond's at 166, probably in part because of this buying down of the, mortgage-backed financing. And that's what mortgages are tied to is, of course, the 10-year bond. So there's predictability. If they're not going to change rates for 1 or 2 years, then people feel comfortable and they don't have a big spike in a payment coming, which could cause more foreclosures.
Right.
But we don't see that on the horizon.
Well, I imagine in the mix you're seeing way more fixed mortgages at 15. Look at the numbers.
All the new ones are virtually fixed.
2.7 on a 15-year.
Yeah, there's no reason.
It went up. We're off the record lows. We went up from 336. We went up three basis points to 339.
Yeah, I don't think that's going to trip any foreclosures. Those are good numbers.
No, but you should want that, right? People, once they see rates starting to move up,
well, then they should jump off the fence and buy. Theoretically true.
where are you seeing, let's looking within Southern California, within Orange County, are you seeing, because you said nationally you're seeing markets like New York, which has been lagging.
Right.
I've seen reports that in Arizona and Phoenix we had double-digit gains.
Right.
And Nevada and Las Vegas. Within Orange County, at the shore and the infill areas, what are you seeing?
Well, I think the coast is firming up fastest, but when I look at just, one measure we do now is look at the REO bank-owned inventory. There's a grand total of 68 homes in all of Orange County that are bank-owned. That's not many. And 5 million plus, and the rest of them fall between 500 and a million and below. There's 37 of them below 500,000, but that'll get absorbed. They've been on the market only 3, 4, 5 days, maybe under 10 days. So when you look at that inventory, that's going to get snapped up pretty quick. I mean, there might be a month or two supply, if that, going on the overall market.
But as far as individual areas of the county, I mean, Irvine, of course, is always a strong market.
Right. The weakest areas for the bank-owned and some of the other areas are Anaheim, Garden Grove, and parts of Orange have got some issues. In terms of where the stress is, it's kind of scattered still. South County is firming faster than North County on an overall basis.
What do you see on the upper end? What do you see on the folks the homes that would need a jumbo loan for one to qualify? But what do you see in this above, say, 700,000? You are seeing signs of life. Yeah,
we're definitely seeing under $1 million is rock solid right now in Orange County, just because, and the inventory is getting absorbed rapidly. Again, price right shows well, et cetera, which is a lot of people are getting that ready. But the super luxury market, we've had a $20 million property close at the Montage oceanfront. $9 million lot at the Strands. These are people that are paying all cash. Once they get over about $3 million, they're all cash buyers. And we have a lot of Texas people coming in to buy Orange County coastal right now.
Isn't that interesting? So
oil money.
The oil money, sure.
Keep drilling.
That is where the money is. And again, looking nationally, August home sales were up at a rate of a little less than 5 million. Best in 2 years. They were up 8.5%. So it proves what you were saying. The new home market, and I know you sometimes work in that new home, cooperate with builders.
Right.
We're always actually seeing a little bit of a sign. I mean, not much building going on here in Southern California, but more than a year ago.
Oh, definitely. And I think we've talked before about the Irvine Company, and their sense of timing is pretty impeccable. It really is, because they're doing projects right off the Laguna Freeway and 405. They're selling like hotcakes. 5, 6, 7, 800,000. And that's getting absorbed quickly. So locally, new home sales is doing extremely well.
How does that, from your standpoint, because your stock and trade obviously is resale, is that competition, or is it, I mean, at this low level of inventory, is it just help that there will be more homes coming on?
What it actually does is oftentimes it might trigger somebody that had a smaller home listed for sale and sell it to a new first-time buyer.
Right.
So that's the beginning of a trade-up market on that. In terms of the rest of it, it's really somewhere between 3 to 7% of Orange County sales, so it's not a dramatic amount, but it's a healthy sign and stimulates other businesses.
Is the fact that the economy is improving, does that make, and we're through the worst part of the crisis where no one knew where it would end, does that make it harder? Say you are that person, you're gainfully employed, but you bought in 2006. Does it make it harder for them to get a short sale accepted by the bank?
No, actually the short sales, there's been a lot of regulatory and other pressures to do that. Those are easier now than we've seen in years for the recession. They've finally staffed up. They've got pressure on them from regulatory people. Get these things done, respond in 30 days. A lot of new laws. And so, no, they're actually easier now than they've ever been.
If you, we'll talk about both sides. All right, so now you're a buyer, and you're looking, when you decide to go to a home or make your offer, you have a lot of competition. What's the strategy?
The strategy is, first of all, get pre-qualified, pre-approved actually with the lender, and have all your ducks in a row, because you're competing still with all cash buyers, especially at the lower end of the market, who are investors. That makes a lot of sense. But you want to be totally pre-approved, subject to an appraisal on the subject property. Have a great realtor help you negotiate that situation. This is not the time for Aunt Betty to be on your team trying to buy a house when you got 5 to 10 offers going on. You need a Barracuda.
And that's pretty realistic. The average home, Orange County, but a great time to be a seller, and we'll get to that in a bit, 5 to 10 offers.
Yeah.
So you can expect that whatever you see that home listed at, you're going to be paying more.
You could be. A lot of it is getting overbid. Again, some will come out way too high, but those that are priced right, and in a great neighborhood, great schools, clearly you're going to see multiple offers. You know, you could see 5 to 20 offers.